What's up everyone, Slay Buddha back here with another video, another GU breakdown. Ooh, this week was so clean. I'm gonna break down Thursday straight. Yeah, Thursday straight. I took 2 trades, 1 win, 1 loss. Man, this week was just so clean, so sexy. I don't even know where to start. Like, I wish every week was like this week. It's one of my best weeks ever. Anyway, before we go on, I'm not a financial advisor, not here to tell you what to do with your money. Don't be a dumbass. Okay, let's start with the daily time frame. What is going on the daily? So on the daily, we tapped into, so I'll break it down real quick from top to bottom, my entries, what I was seeing on the charts, why I took my trade, and I'm also going to break down why I took the loss. And what I did wrong. Let's actually check the trade itself. I completely forgot about that. This was Friday's trade. Oof, fucking sexy trade on EU. Beautiful. I'm just trying to show off here. Yes, I'm showing off. Okay, let's go to GU though on Thursday. So this was a loss I took right here rather. This was a loss I took. I'll explain why I took that loss. And this was the win I took for 5R. So a total of 4R for today. Over there, so that was the entry, and this is the trade. Very smexy. So I've heard smexy. What does smexy mean? Smoking sex. That doesn't make sense. Anyway, so sexy trade. Let's start with the daily. So daily, we tapped into a daily order block right there, although we can refine that to the 4-hour. Yeah, we can just refine that to the 4 hours. So we tap to the 4-hour order block like so. So expecting, and it's at the extreme of discount. So expecting, of course, a nice push up. So we are still bearish. We're still bearish. 4 hours still bearish. 4 hours is what I use mainly for my higher time frame. So 4 hour is still bearish. We've been breaking structure to the downside. We are bearish until we break this high. We are bearish. Okay, on the 4 hour. So we're still bearish. However, we are having that retracement to the upside. And what do I see here? We have a 4-hour order block. And if you've watched AKFX's videos, you know this is a strong high that took our liquidity. I think this was the news caused that wick. Took our liquidity and broke structure. So strong high, whatever, expecting total price. Anyway, 4-hour order block. Let's look at how I entered. So we have this 4-hour OB. Price did test it here. We tested it here. We tested the 1 hour inside the 4 hour. We tested that order block, and price then broke through, taking the liquidity from the equal highs up here. Now, okay, let's start with this. So I'm gonna take this off. I'm gonna take everything off. A lot of people would see this and call this a break of structure, and you know, I can see why. It did, of course, it's a body candle close above the structure. Me personally, the way I saw this was accumulation, manipulation to the upside, and distribution lower. That's the way I viewed it. I didn't view it as a break of structure, because when I see a break of structure, I like it to be, I like price to really impulsively break through and follow through all the way down. See how we break this structure? We just follow through all the way down. You know. See how we break the structure? We just follow through all the way down. That's how I like to see a break of structure, first of all. Secondly, also because we failed to break this high. So I was ready, like, you know, this is a real break of structure. We should have just followed through and broke this one as well. Not to mention, we have this FU candle here. This is an FU candle that price reacted to. Why is this an FU candle? I don't really think I have to describe why it's an FU candle, but it did grab liquidity, and again, this is a news trade. This is the new, what's the FOMC? I don't really know what news it was, but the news that short price up to grab all this liquidity, tap into this order block before we drop down. So of course you're expecting after the manipulation, you know, when price comes back into that zone, you're expecting to see a reaction, because you know the market makers, whoever's manipulating the prices, the algorithm, of course, there's no one sitting behind the computer and intentionally manipulating prices. Sorry, I don't know why I found that funny, but what was I saying? So yeah, they manipulated prices, and when price comes back into that zone, they have to close their trades at break even, so they don't end up in a loss. Okay, that's why when we come back here, you're gonna see that reaction. So we have that FE candle. For me, this is not a break of structure. This is just AMD, accumulation meaning a range. Price manipulated upside. So a lot of breakout traders are buying. A lot of people who thought that maybe they can sell from the double tops here. Sorry, from the double tops here. All the people selling, their stop loss got hit. Breakout traders, they're thinking, oh, I'm in profit, we're going to keep going, and then boom, whatever, the stop loss gets hit. So for me, this is AMD. But anyway, let's then look further and see what happens. So we've tapped into the FE candle. We've grabbed liquidity from up here. Now, what was I saying? Okay, so we go to the 15-minute. We have raid of the previous daily high, a break of 15-minute structure. Initially, I wanted to sell from here. I actually had a limit right there to sell from because I thought price was gonna sweep the equal highs here, sweep these equal highs, and tap to here and drop. But we actually reacted off the 10-minute order block instead, like so. Okay, but I still I had that marked out. What happened? We broke structure again. We broke structure again. So now I'm looking for sells. I'm bearish. I'm looking for sells. We pulled back into the order block in these wicks. So when we pulled back, I didn't want to take an immediate entry from here, like a risk entry, because of this candle, because of this unmitigated order block. I thought maybe it's possible price could come up and grab liquidity, tap into here, and then drop. So my limit was here, and for this POI, I was waiting for extra confirmation. So I just want to clean this up a bit. So yeah, I was waiting for extra confirmation here. If I get that confirmation, then I'll take a sell, and if not, then I'm assuming price is going to come up here and take out that liquidity into this 15-minute POI. So go straight to the 1-minute time frame. I have my zone on the 50-minute. I've marked out my zone. I know I'm looking for sells. Now let's see the entry. What was the entry? Super clean. So first we have liquidity taken from these highs right there, stop hunt. You could also say we took liquidity from this high here too. This is also liquidity, so whichever one is fine, doesn't really matter. But we do have that stop hunt followed by a break of 1-minute structure. So we have that shift that happened here too. So shift of market structure, a break of market structure on the 1-minute for the entry. And initially, well, this is where I wanted to enter from, like so. But I used market execution just because it was coming up really fast, and I had to like calculate my losses and everything. So my entry was a little bit lower. I had a 3 pip stop loss. This was supposed to be my entry, but because it was a market execution, I didn't catch it enough. My entry was around here, still with the 3 pip stop loss. That's why when you see it on, not this one, when you see it on in my journal, you see that the stop loss is down here. Your stop loss should be above the high. This is the safest stop loss to have. This was just because, again, I didn't catch a perfect entry. It was a little late. My entry was a little late, but the stop loss should be above here. Now the next thing is where to TP. Where did I TP? I TP'd at 5R. Not blindly. I didn't just blindly TP at 5R. If you go to the 1 hour time frame, we have 1 hour order block right there. So I knew that I should be very careful, because more likely than not I'm going to see a reaction. I'm going to get a reaction from that order block, and it could possibly stop me out. So it aligned perfectly with my minimum risk reward per trade, which is 5R, and that was my sell. So that was my win for the day. Let's go over the loss I took. So the loss I took was down here. So anyway, we're in the 1 hour order block. From the 1 hour order block, what happens? Let's clean it on the 2 minute. Okay, let me just clean this off. We break structure. Before we break structure, we have that shift in structure, shift in market structure right there, followed by a break of structure, the entry I should have taken was this one right here. This is the entry I should have taken right there. We have the 2-minute order block. We also have liquidity taken out. Before price gets here, this is probably how I'll draw all my liquidity. Just like all of this. All of this is liquidity, this whole thing here. But anyway, we took our liquidity into the 2-minute order block, stop loss down here. This would have been your first trade. Maybe aiming for this high or aiming for this high to be taken out. Now, what I thought was that I can get a second re-entry to ride it up. And I was thinking, okay, maybe we can take out these equal highs because we left equal highs here. So I thought, okay, even though we're bearish, we could still see a deeper retracement. Maybe even into here, the 50-minute order block I first want to enter from before we see any kind of sell-off. Although, what happened is, of course, like you already know, I took a loss. So this was my entry right there. I called this is the break of structure I used, and this was the inducement. The inducement was pretty sexy actually. So I took a loss. Now, why did I take this loss? Why was this not valid? Why didn't we even see a reaction? First of all, this break of structure is a minor break of structure. It's not this is the major structure. This is not major structure here. This is the major structure you want to see get broken, right? To really give you that extra confidence, that a very strong confirmation that we are going to go higher. This is the structure you want to see get broken. This is just minor, like substructure, structure, a pullback structure. See how we pull back into here. So yeah, this is not major structure. That was my mistake. Wait, let's actually see. Another thing I failed to notice, which I'm actually just seeing right now, is this is actually, even this break of structure is not a break of structure. Why? See, if I see a break, an impulsive break, and then immediately there's an impulsive return, I'm gonna check a time frame or two above to see if it's a wick close or if it's a body candle close. Okay, so you check the 5-minute time frame. Is it a wick close? Body candle close. Sweet. Let's check the 10-minute time frame. Wick close. So even this as well, it's not a very good BMS, right? So sometimes when I'm not sure, I'll check the 5-minute, 10-minute, 3-minute, just to see what it looks like. And you can see this is more so like an FE candle goes up, and then it just smashes all the way down. So those are the reasons why I took a loss. A third thing you could say was that we actually have a better POI. So this order block down here is actually a better POI to use, especially because if you check the lower time frame, I just want to clean all this, pretty messy. If you check the lower time frame, this is now inducement for this order block. Although we didn't even tap into it before, we got the reaction from the whole 1 hour OB, but this is the inducement, right? So we're not expecting this to be a very strong POI, because if you look below, we have a better order block in better pricing, i.e. discount, and this is inducement for this POI. And we did get the reaction, but of course we end up breaking the structure and going lower. But that was my day, guys. 1 win, 1 loss. Honestly, that loss I took should have been a 0.5 hour loss. Usually I would risk less on a second trade. If the first trade is a win, I'll risk less on my second trade because I don't want to lose too much of my profits for the day. But I don't know, I just kind of forgot to risk 0.5. I don't know, I don't really have a good reason. But anyway, that was the trade. Do I have anything else to say? No, I don't have anything else to say. Oh yeah, if you can't tell already, I'm back to scalping. It's just I just wasn't patient enough to wait for high time frame setups to play with intraday. I still would take intraday trades if it appears, but for now I'm just going back to the 1 minute. 1 minute is just, it's my baby. I can't just let it go. But yeah, I'll see you guys in the next video, maybe next week or something. Is there anything I'm supposed to say? No, there isn't. Alright, peace out, guys. Let me know what you guys thought again of the video. Was it clear? Did you understand? Make sure you guys backtest. Always backtest your losses. Always see what went wrong, what you could have done to either avoid that loss. Maybe you didn't set to break even fast enough. Maybe your entry was wrong. Maybe it was your analysis, your direction. Figure out what is wrong. When you analyze your losses, you're able to see a pattern. If you're not consistent yet and you're taking many losses, review your losses and see, maybe there's a pattern. Maybe your direction is always wrong. Maybe your entries are always early. Maybe take early entries. You don't wait for inducement of a POI. Maybe your POI, your zones are wrong, but your direction is right. You have to figure out, why are you taking losses? What is the reason? Is there a pattern? And there's a pattern, you figure it out, and you can go study or whatever it is you need to do. You get it done so you can be profitable. So always review your losses, guys. Very important for so you can learn and you can grow as a trader. Anyway, how long is this video? It's pretty short, huh? 15 minutes. Yeah, not that long. I don't really like keeping long videos. I'll see you guys in the next one. Peace out. Oh yeah, and also okay, never mind. Yeah, peace out.